We have Mr. Subramaniam with us. And Sunil sir, give us your read-through of the kind of moves that we're seeing in the market right now. The trend of broader markets outperforming the benchmarks, it's once again back. What is your outlook on where there is more opportunity in the market right now? Is it towards the broader end, or should one still be playing it safe with the larger caps?
So actually, if you see, playing it safe with the larger caps is the word you've used, but I wouldn't say it's today's safe territory because, the FIs are the ones who've been selling. So actually, large caps have been under a fair bit of pressure because the IT index there, the banking index, they're all recently because FI flows haven't come back despite the good news on the domestic front. It's the domestic flows which are holding up. And I think if you see the fund managers who get the flows, more than 50 to 60% of the flows is in the mid and small cap and sectoral funds. So consequentially, buying support is there for the broader market. So the broader market is a safer place, is the larger cap space, right? Which is today, because of the uncertainty around FIF flow, that's a little more volatile. So it's a little bit contrary in what I'm saying. And so I would say that actually the recovery should happen in the larger cap space. So coming back to your point is that, yes, you should have a decent allocation large cap because you go by the latest news that we are all trending on today is Mr. Trump's rapprochement towards India, right? After his tweet saying that India has gone into the Russia-China corner, he's now backtracked. He's talked about his friendship with Mr. Modi, how he's a great prime minister, and he's going, the trade talks are going on. So if that's the case, and FIS, and yesterday, after a long time, FII flows turned positive 2,000 crores. So I'm saying that if this is a sign of the things to come, and with the Fed rate cut, 88%, 90%, 25 bips rate cut is factored in, it should ease more flows towards emerging market, and India should get its share because our share in the emerging market index is almost 17%. From a passive perspective, at least flows should come back. So I would say that you should now diversify across large, mid, and small. Domestic buying support will continue, especially since GST, you have had the consumption pack show a sharp rally. There will be some profit taking in that space, but I would still say that from medium term, it's the Indian economic growth which is still going to drive the markets, and that's probably my space then is capital goods and public sector banks, those which are domestically oriented. But when FIS come back, IT will be preferred. So there'll be a contra play there. And if the trade deal talks indeed are going to go through positively, then the export oriented sectors which got hit will probably be also showing a recovery. So today it's better to be broad based, not just across sectors, but also across the cap curve. I think that's the best and smartest strategy to be in today, because I do think that the FIIs have ignored the good news from India for pretty long now. And sooner or later, there should be a reversion to mean, and they will start coming back into India.
That's about the flows, and yes, of course, we are somewhat playing that happening in the markets as well, because IT is indeed one of the top gainers when it comes to Nifty 50 sectoral moves. But yes, as we have been waiting by for the SIP data to trickle in, we'll try to find out whether or not we manage to scale past and sustain above that 28,000 crore mark or not. But before that, let's put the spotlight on the PSU banking space as well, because in the banking space, the PSU banks have outshined the private banks this year so far. But let's find out what are the key reasons for that. And for all the analysis and details, let's go across to my colleague Varun, who is standing by with that. Varun.
Well, so the PSU bank index is actually outperforming the other indices, not only today but also in the last 6 months. Let's look at the numbers. Today it is up by around 2%, but if you look in last 1 month, it has been almost flat, whereas the private bank index, the bank Nifty index, and also the BSE PSU index has actually declined. Also in the last 3 months, it has been the same case. Also in last 6 months, if you look, the Nifty PSU bank index has actually shown a growth of around 21.5%, actually outperforming the private bank index, the bank Nifty index, and also the BSE PSU index. Now, there are several reasons because of which we have seen this outperformance. First of all, it is the earnings, because if you look in the Q1, there has been decline in net interest margin and also asset quality across banking sector, but the overall performance of PSU bank was better than private banking sector. Also, if you look going ahead, there would be decline in net interest margin, but also you will see the overall cost of funds coming down, and that will come down more for PSU banks. That is what is understood among the analyst community. Also, with the CRR getting cut from September, you will see more liquidity coming into the system, which will be beneficiary for the overall banking sector. the GST rate cut or the GST rate rationalization that has been done will actually impact the overall economy. It would provide stimulus to the economy, and there is an ICRA report which says that it will impact the overall credit growth of banking system as well. Also, the downward repricing of deposit base will actually make banks more competitive when you compare to other debt capital markets. So this is one of the other tailwinds for overall banking sector as well. Also, if you look at PSU banking sector valuation, majority of the PSU banks or many of the PSU banks are still trading below the price to book value of 1. And if you look at the private banks, they are trading around 1.52. So the valuations are also reasonable, and the resolution plans of some of the companies like JP Associates will actually put some money into the kitty for PSU banks. So that would again be a benefit for PSU banks as well. Also, if you look at the credit growth, there was a time where the credit growth had actually slipped into single digit, but it is back to double digit, because if you look in the 3 fortnightly data of RBI, it shows the credit growth is actually back to around 10%, though it is double digit, but yes, low double digit, but yes, there has been a rebound, and PSU banks are one that would actually get major benefit of this revival in credit growth. So there are several tailwinds because of which you are seeing PSU banking index actually outperforming Nifty Bank, private banks, and also the overall PSU index, not only today, but also in the last 6 months.
Okay, that's that on what we're seeing within PSU banks, which, by the way, are in the limelight today. But want to focus in on the AMFI data right now, and the SIP numbers are out. So let me quickly take it across to Sharad and get in what the individual classification performance has been like. And of course, after that, we will speak with Jaiprakash Toshniwal as well. But Sharad, you go first. What have been the sectoral flows like? What have large cap, small cap preferences been like? And what is the overall, SIP data indicating?
Well, the overall SIP data is indicating that the retail strength is still there. It is just a minor cut coming in if you compare it on a month-on-month basis. The SIP numbers is still comfortably above the 28,000 crore mark. Now, looking at the overall numbers, the inflows, that they have actually come down at 52,443 crore rupees. But do remember, there is an outflows coming in from the liquid funds. That's why the numbers are looking less. Equity inflow, that has moderated. Last month, the July was a record high equity flows coming in. But now there is a moderation coming in, but still it is above the 34,000 crore mark, and this is the third month in 2025 which is happening. So there is no cause of concern as such, but of course the AUMs, if you look at it, they are still near the record levels. Now there is a sectoral churn happening as per the analysis. Except dividend yields, all the equity schemes have seen inflows coming in, but there are two major changes I'd like to point out. Of course, with respect to the large cap funds, over here the inflows have gone up by 33% on a month-on-month basis, while the small cap fund inflows, that has significantly come down 23% on a month-on-month basis. Mid cap, however, has seen inflows of almost 3% incremental coming on a month-on-month basis. That means there is a moderation in mid caps, but yes, the mutual funds are clearly steering away from the small cap space. Now the sectoral funds, the major chunk blow coming in here, 60% downtick on a month-on-month basis when it comes to the overall flows coming in. But flexi cap, that has maintained its lead for the second straight month. There has been strong flows coming in. But the culprit has been the new fund offers, the NFOs. These NFOs have actually come down drastically, and that is why it has impacted the equity flows as well. But interestingly, equity segment still sees its 54th straight month of flows coming in. And do remember, only you could say 2,900 odd crore rupees of flows have come in the NFOs which were launched in the month of August. So NFOs, sectoral theme and small cap funds have seen a significant downtick on a month-on-month basis. But on the other hand, interestingly, large cap has seen strong flows coming in.